So earnings are about to come out. I want to offer you guys a perspective into what's happening here in China in terms of the numbers and also what the CEO said. So straight off the bat with deliveries in Q2 of 2023, NIO delivered 23,520 deliveries. That is a 24% decrease from Q1 of this year and also a 6% decrease year over year. This we know for a fact because the delivery numbers are already out. What else do we know for a fact is the number of stores that they opened and the number of charging and battery swap stations that they deployed over this time period. So January, they opened 13 stores, 26 charge swap stations. February, 7 stores, 23 charge swap stations. So charge stations and swap stations, we're just combining them together to make it easier to understand. March, they opened 12 stores, 32 charge and swap stations. Now, stores includes NIO houses, NIO spaces, NIO delivery centers, NIO service centers. These are all combined together into stores. So in total in Q1, we got 32 stores and 81 charge and swap stations. In Q2 numbers, this is pretty interesting, all right? April, we got 25 stores open, 175 charge swap stations. May, we got 21 stores, 159 charge and swap stations. In June, 30 stores, 224 charge and swap stations. So combined together in Q2, they deployed 76 stores. That is a 137% more stores increase than Q1. And then they placed 588 total charge swap stations. That is a whopping 589% increase over Q1. So they are really going ham on infrastructure. They're building in a lot of new houses. They're building in a lot of swap stations. So straight off the bat, you know, deliveries are lower, less money from sales, and then they're spending all these money on new houses, storefronts, and then also swap stations and charging stations. Lots of infrastructure deployment. You can call it cash burn or you can call it investment. And this really lines up with the fact that NIO CEO said they are going for 1,000 plus swap stations deployed in 2023. So they are working hard toward that target. One reason they're able to get those numbers up really fast is because the second swap station factory has been opened, pumping out swap stations. Now, what could the earnings numbers look like? I'm going to offer some insight about what I think the earnings numbers could look like. So first of all, we got to look at Q2 of 2022 earnings, the same quarter last year. So the same quarter last year, we delivered 25,059 vehicles. Remember, keep in mind, Q2 of last year, that's when we had the Shanghai COVID lockdown. It was just terrible. People were trapped in their houses. It was nasty. Even here in Beijing, people trapped in their houses. Shanghai, all the delivery centers closed. So it was a terrible quarter, but still, deliveries were higher than Q2 of this year. Just to put things in perspective, pretty shocking. That's the effect of price war, right? And if you haven't seen my previous video where I break down the ET5 numbers, you got to check that out. So Q2 2022 deliveries, 25,059. Total revenue was 1.536 billion. Vehicle sales, US 1.428 billion. Other sales, 107.7 million. Cost of sales, 1.336 billion. Vehicle margins, 16.7%. Very good vehicle margins. R&D, 370 million. Loss from operations, 428.8 million. Net loss is 411.7 million. Not so bad stats, all right? Now, let's look at Q1 of 2023. This is where things start getting closer. So, deliveries, 31,041. Total revenues, US 1.554 billion. Vehicle sales, US 1.343 billion. Other sales, 211 million. Cost of sales, 1.531 billion. Vehicle margins, 5.1%. 5.1% for the vehicle margins, mainly because in March they did a sort of a clearance sale for the first gen vehicle models like my EC6 and other cars like that. The first gen cars, they just got to get rid of it. And they also sold it in bulk to third parties. So that happened. That really lowered vehicle margins as well. R&D 447 million, which is a 74.6% increase from Q1 of 2022, but a 22.7% decrease from Q4 of 2022. 74.6% year-over-year increase in R&D. Now, NIO CEO has said that R&D expenses will increase by 30% in 2023. I have that video. Go check that out if you haven't already seen that. He also talks about a lot of other secrets, very good. But the general gist of it is that R&D is going to be higher than last year. Maybe not like Q1, 74% higher, but like 30%, like he said. So we're going to put that assumption to the test later on. Loss from operations, 744.3 million. Net loss of 699.5 million in net loss, total net loss. So we're going to assume that vehicle sales were US 1.017 billion. Now, the number, or this number might be on the lower end because Q1 we had that clearance sale. However, I think that this is offset by the depreciating yuan because this is all in US dollars, and also the price cuts that took in effect on June 12th. So for about 20 days, we had price cuts for the vehicle. So this could mean that the average vehicle sale price is also about the same as Q1. So that's what we'll get for the vehicle sales. And the other sales, we can't really tell because that just varies greatly. But let's assume it's the same as Q1. Assume, all right? Understand, it's an assumption. That gives us 1.228 billion US dollars total revenue, which is a 21% drop quarter over quarter and 20% drop year over year. Not looking too good. Cost of sales would probably be around 1.16 billion US dollars. If we assume the same cost of sales per vehicle for Q1, that's what we'll get. I want you guys to know, and this is for Q3 right now. For Q3 right now. That is, of course, NIO is giving massive bonuses to the NIO sales reps, especially for July and August right now to boost deliveries. So for Q3, this value would increase dramatically. But for Q2 numbers, that doesn't take effect, so that doesn't affect Q2 numbers. So we're just going to assume that it's the cost of sales per vehicle is the same. That'll give us 1.16 billion US dollars. R&D 416 million, assuming a 30% increase from last year. This is probably on the low end, given that Q1 is a 70% increase. And also, other things they're doing, they're getting the phone out, R&D for the phone. They're getting ready for NT 3.0. And then this is also, Q2 is also the time where they started putting final touches for the EC7, ET5T, and the ES8. So probably a very R&D intense quarter. And then we got loss from operations. This one's really hard to gauge because of how many stores they've deployed, that they've opened, and how many swap stations they've put out. I mean, it's just an incredible amount of swap stations. But overall, I think we might see a very, very big loss for this quarter. Definitely, in my opinion, higher than Q1 loss, which was 700 million, basically 700 million US dollars. So I think we might be pushing towards maybe 800, 900 million in losses, even close, maybe even surpassing $1 billion in losses for the quarter. They're spending all that money, but the car sales are declining in Q2. So in my opinion, and none of this financial advice, of course, we could see a very bad quarter for Q2 numbers. So for anybody expecting a surprise that Q2 numbers are going to be good, we might get a positive reaction in the stock price depending on guidance or something like that. But in my honest opinion, I don't think that Q2 numbers will be pleasant at all. So just keep that in mind. I think it might be the worst quarter in NIO's history. Just my honest opinion. And vehicle margins probably will turn negative, like Expo. What do you guys think about Q2 numbers and your assumptions for Q2? Stay safe, stay healthy, peace out.